Hey everybody, this is Paul. Today is the 25th, 12:34 p.m. Central Time. The market is currently open. As you can see, today is doing pretty good. The market is currently kind of in a recovery mode, so I'll go over what's going on since the last time I posted a video. Um, I normally post videos on Thursday, sorry about that, but this will definitely be a video that I can kind of go over just a little bit. So as you can see right here, going into the Federal Reserve week, it's a very strange market. There's so many like different conflicting headlines, good news on top of bad news. I'm assuming there's a lot of Wall Street guys that thought that the recovery was going to be just like, pressing a gas pedal down to, 100, and then like it would just, stay at 100, like you would get a million jobs a month kind of thing, and then everything would be great. And then this is a very quick moving market. Um, if you go by just the headlines, like the headlines have been completely conflicting in the last week. This right here is a past indicator of inflation. So this measures past inflation up to this point, and it says biggest inflation ever. And you get a move in the bond market that starts to try to price that in. But then all of a sudden you'll get another thing that says it's coming down. So the one thing we do know for sure is you have to decide what type of investor you're going to be in this market, because if not, you're going to just drive yourself crazy. So if you're a dividend investor, you literally don't care. So m- prior to June 11th, so on June 11th, right here, at the end of June 11th, which was this week right here, going into the Federal Reserve week, where they move some dots around and the market's so super scared about tapering, the big word, the big T word, and rates going up and everybody's freaking out. My dividends were at, I think, 2,300 on the 11th, and by the end of last week they were still 2,300. I actually had more things pay out, so I had more dividends. So these little market moves, while they're nice, that's going up in one direction, whenever you get a down week like this, because this was a 4% correction, or almost a 5% correction in one week, that's just kind of what the market does. It does these 5% corrections every once in a while whenever the market gets kind of expensive. Um, so pretty much, I think at one point, if you look at my spreadsheet, because I like to keep track of these days. So right now, I haven't added in today's numbers yet, but it says compared to June 1st, I'm down 550. So, like, compared to, I'm down 550. And I think this is a calculation error right here. I think that was actually a wrong number that I put in right there. It was probably closer to 24. I'm just going to say 24.15 or something like that, or 24.20. E-Trade kind of updates really, really weird when it comes to dividends. Um, so this right here last week said 1,700 down compared to the first, but I was only down to really, I wasn't even close to where I was in April 1st, and I was barely down to where I was on May 1st. So that it's basically, the market's been kind of flat overall. You can't really draw it on this performance thing, but outside of this blip right here, the market's been kind of in a line. It's very steadily, slowly going up. Um, but there's so many conflicting narratives, because when everything you think is going great, you get key inflation, everything's going up. So oil responds, and then that starts to, I'm not sure what the market's trying to price in. If you're a dividend investor, just buy your dividends and come back and then buy some more dividends and then come back and buy some more dividends. Today, AbbVie was down 1.73%. I bought more AbbVie. Um, I can't really try to make sense of this market. Uh, so if you look at my transactions, I did get rid of the IBM last week. That's the only thing that I sold last week. I took profits on it. I had owned it for more than a year, and it's more of an old school type tech company. If it drops into the $120 range, I'll buy it again. And this one actually does tend to do some weird stuff around their earnings because either they're going to do really good on their earnings or they're just going to bomb their earnings. So if it actually drops into the 120 range, I'll buy it again. But that's one that I actually dumped off. I took that, and you can see what I've basically been doing. Bought, 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 bought. Pretty much every single day this week, I buy something. Um, the majority of my everything that's been going on probably since what the 16th or so has all been bought, 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 bought. So basically, what I did is I bought the dip, and this is typically what people recommend that you do. You have some money sitting on the side that's sitting in your cash balance, and then whenever you see these kind of dips, you just jump into them. And especially when I see dips in AbbVie, I'm gonna buy more of that. Regions Financial, this was one. It dipped into the $19 range, and if you want to see what I did there, every single day, bought, bought, bought. These shares that I bought, this one share that I bought right here is already up 7%. Because at some point yields are going to go up. So the only time that you'll see something like Regions get its price cut in half, and that's literally what happens, is if we get a recession, because they're not as big as Chase, for example, but you know, whenever rates start to go back up, these types of banks, like this was a $22 stock at one point, I think, when it's over here, and then it went down to 19. I mean, that's just an easy one, especially if the dividend yield is over 3%. So that was an easy buy. I think I bought three NRGs right here. Utility company right here. Bought this share. Just basically just been adding. Not going to do much selling anymore. If anything, I might add maybe a little bit more until, like, say, some of these little municipal bonds that are tax free. You can see how long I've held these. I've held these forever, basically. So I had a $200 right here, but those are just tax-free municipal bonds. My current strategy is just to add more and more. One of the stocks I bought qualified in the fully paid lending program. That's where people are shorting it, and you're getting paid because they're shorting it. I thought this was slightly interesting, so I bought these two shares, and then all of a sudden, there's some guy out there that's shorting that ETF. They're probably shorting the UK because that's what this is. But some guy's out there, he's willing to pay whatever rate that they're charging them to short it. I'm getting little cents here and there. And that's one that pays out biannual too, by the way. So EWU this is actually pretty nice because it pays out biannual. So I'll only get paid in June and I'll get paid in December for this one. But because some guy's out there shorting this thing, I'm getting paid basically every single day. It's not some major crazy amount, but 1 cent, 2 cents, 3 cents right there. It's like a little mini dividend I'm getting. And that pays out once a month on the 15th. So as long as that guy keeps shorting, hey, more power to you. And the price of it's not really moving, so I don't know what he's shorting. But must have a long position short or something. I don't know. But whoever it is, thanks for your money. So, but yeah, I thought I haven't seen E-Trade do too many stocks that would go into that little short bucket right here. But yeah, find that interesting. I just really find that, when I owned AMC, GME, that type of thing, those things, as soon as you own them, they go in, somebody's shorting them, and they want to borrow your shares. But I wasn't expecting EW, so that's a nice little surprise. It's just basically free money. So estimated income in this account right here is a little bit, and then I also added a little bit to the IRA. Over here, I added, I believe, I could check it, right here, just a little $100, bought 2 shares of SPHD, and then 1 share of, GYIRX, that's a municipal bond. So that's basically the plan right now. Just keep adding, keep growing the portfolio. Well, so small little update as the market continues to recover. I have no doubt that it's going to continue to recover. I think and one of the main reasons that I think it's going to still continue to recover is because by the time people start to price in inflation, it's already going through the system. So this is that example that I gave last week where this was almost $10 and now it's already back to $7.98. I wouldn't be shocked if this starts to actually go lower much quicker. Um, chips are obviously something that's something that's still very short. So there's a lot of capacity that needs to be added there. But and these are typically, so if you see Micron, for example, is one that's going up every day, just about. But it's very conflicting headlines because you'll get this, and then you'll get something that says, oh, well, it's actually starting to go down. So it's interesting. So we're gonna have to definitely keep monitoring this inflation. But as a dividend investor, I'm just investing in good, solid stocks. Well, thanks for watching. Y'all have a nice day.